Welcome back. Happy Friday, everyone. Really appreciate you checking in on NYU Grad's daily podcast on stocks and finance. Let's get into the numbers. I promise I will not have any F bombs today, other than the title. The title is going to be called Fuckbook. That was the actual original name of Facebook when Mark Zuckerberg was at Harvard, and the goal of him building it out was kind of like not a dating app, but like would you type of collection of photos um, for gazing at people, so photos. And now they are one of the largest companies in the world. So let's jump right into the numbers. Lots to cover. I'm going to go off on a tangent, but not as much as yesterday. I was able to go into the Apple store on my lunch break, and there was no line for the demo of the Vision Pro. So I said, heck, I have 25 minutes, 30 minutes. Let me check it out. So I'll cover that as well. So the numbers today for new highs, we had 921 versus 279 new lows, which is very bullish, 3x new highs. We had 35% of shares advancing versus 60% declining. That's curious. And I'll talk a little bit about this. And looking at the 50-day moving average, it expanded from yesterday. We now have 39% of shares below its 50-day. And we have 36% of shares below its 200-day. That's about the same as yesterday, if memory serves me correct. If I had to sum it up in one word, one sentence, it would be the jobs data shocked while Meta outperformed everyone. That's the show in a nutshell, but there's a lot more under the hood. So looking at the Mag 7, I'm going to focus today a little bit more on the Mag 7, especially Apple and Meta. But Microsoft was up 1.8%, NVIDIA was up 4.9%, so 5% basically. Google was up 0.58%. Meta closed the day 20% higher. Amazon off their earnings up 7.87%. Tesla was down 0.5%, and Apple was down 0.54%. Looking at the one-day performance for sectors, it was a mixed bag. The leading sector was communication services. Then you had consumer cyclical, then technology. You would think technology would be the leader, right? Very curious. Then industrials, then financials. And on the red side, the biggest loser sector today was utilities, then real estate, then basic materials, then energy, then healthcare. Makes sense, right? All the hot money is going into communication services and tech, so it comes out of healthcare names, it comes out of energy names, it comes out of basic materials. The rates spiked today. I'll talk about that. So real estate is going to be down, and utilities, which are interest rate sensitive, are down. So that was, if you have to run, that was in a nutshell the day. But I want to dig a little bit deeper into this. So this morning, I said yesterday on Thursday's podcast that if the jobs number were to come out positive or negative, what could potentially happen here. And we had a gangbuster job number this morning. So on Thursday, Powell at the Fed rate decision speech said, we may not cut rates in March because he needs to see more data on jobs. Jobs is still healthy. And look at that. Today, jobs are super healthy. The jobs non-farm payroll number came in double of what was expected. Everyone was shocked. I was listening to the Bloomberg radio this morning. Everybody was just like, oh my God, this is the perfect jobs number for Biden. He's going to go out on the road and tout this surging employment and jobs picture and wage growth, Bidenomics is working. So that is the narrative that is going on higher level with politics. And I'm not going to get into politics, but this data, the way it's proposed, will be used as a weapon for politics. But curiously, on Thursday, Peter Schiff noted on X that the Challenger report called out 82,000 layoffs in January, the worst January since 2009, excluding COVID. And ADP reported 107,000 jobs created in January versus what was reported today, which was like 350,000 jobs created. So the question is, who do you believe? Do you believe the government or do you believe the private sector? So we'll have to see. My suspicion is that we're going to have these job beats and downward revisions after the fact to be used as a weapon in the campaign trail to try to win presidency, but we'll see. The 10-year yield spiked almost 5% today to a yield of 4.04. So I also noted on Thursday that yields and risk assets stocks cannot trade in tandem for more than 72 hours, and usually one will resolve and diverge. We didn't have to wait 72 hours. Yield spiked, and I would say today was a mixed bag. I'm going to say that if it weren't for Meta, if it weren't for Amazon, we would probably be down 500 Dow points today. And I'll get into a little bit of this in the what was strong, what was weak. But I have a sneaky suspicion on Monday, because of the way we closed, because of the 10-year yield spiking, Monday is going to be a red day. You can mark my words. I'm not 100% accurate all the time, but looking at the clues that the markets are giving me, I would suspect either Monday or early next week, we're going to have a sell-off. I believe this sugar high of the Meta dividend and buyback news will run its course. And I think we shall see lower prices next week. That's just my hunch, okay? Not financial advice. But I did, on the topic of Meta, I wanted to talk about the podcast yesterday. And I walked through during the whole about me and my trading philosophy, my background. And then I started to get into the discussion of Meta / Facebook and how I hate the company with a passion. But I also want to share why this is also dangerous when trading. We all have our own biases, whether it's political, company. A ton of folks hate Elon Musk because of his political affiliations and him leaving California for Texas. And people hate Elon Musk, so they hate Tesla. Like, I understand. I get it. But it's very dangerous to mix your emotions and personal convictions with trading. And I'm actually going to share some of my trading wins with Meta, Facebook, but also potentially what could have been. So in the show notes, I will have a screenshot. Please make sure you check it out on Substack. But it's basically the lifetime chart of Facebook / Meta, split adjusted. So this accounts for all the splits when it was Facebook, FB as the ticker symbol, not just Meta. And the reason why I want to bring this up was I had an excellent trade on this. And why I'm proud of this initial trade in the yellow zone was I always hated Facebook. But yet I went against that and I actually went long Facebook. I demarked its very small pink box of when I got in. There was a balance area in late 2013, and it broke out of that balance area. We're talking about like $50, not pre-split. I rode that trade all the way up past 200, then back down to about 150-ish, and I got out. I should have gotten out earlier, another mistake on my part, but it was basically a 3x on my money on that trade. Yay, clap, 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 clap. But then you take a look at where it is today. And this is where the lesson comes in. Yes, I could have gotten out sooner and I could have booked more profit, sure. But then after I got out, it went against me and it rocketed higher to like past 200, and then it crashed. But after I got out in 2017, I never traded Facebook/Meta ever again because of my conviction, and I just hated the company. I hated what they stood for. I hate social media, blah, 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 blah. So I just basically never really looked at it as a trade. And the lesson here is, while I could have lost a lot of money trading it beyond 2018, the other flip side is there were a ton of balance areas within that time frame I could have taken advantage of, whether long or short. And I could have made a lot of money because Meta had a lot of volatility. We're talking like once I got out, it went up, it doubled basically to past 240. Then it crashed to like 120. And then from 120, it went all the way to back to 230, then crashed again down to 140. Then it rallied all the way to 400. Then it crashed all the way past 120, and then it rallied all the way now to where we are today, which is like astronomical prices. But that's one lesson, and I have similar. I got in NVDA very early. I'm talking like I'd have to look at the chart. And I sometimes don't want to look at it because I look at what could have been, right? I could have retired probably 3 times over. But I probably made roughly about 8x on my NVIDIA trade. I got out and it continued to go up like 1,000%. But I don't have any, conviction feelings on NVIDIA other than I think the PE is a little crazy right now. So these are just, my whole point is, don't ever let your convictions or personal feelings hinder your trading, right? Because you could be vegan. You might hate meat eating or meat producing companies, but you could have made a ton of money trading those vehicles and then put aside money to promote awareness for veganism. That's my point, right? Like, don't let your personal feelings interrupt your trading. The other thing I wanted to cover, so going back to the other Magnificent 7 Apple, during my lunch break, I popped into the Apple store in Chelsea, and they grabbed me, right? I wasn't even looking for a demo. I just wanted to see if it was available and what the lines were like. I stepped in, and 4 associates, Apple folks, came up to me, wishing me, hey, how's your Friday, blah, blah, blah. You want to check out the new Vision Pro? I said, I only have like 25 minutes. How long is it going to take? So, it's about 30 minutes. I'll get you in right now. There's no wait. So that's not a good sign. Usually with product releases, especially in New York and California, there's like lines out the door. So I sat down, went through the demo, setup process, and demoed it. And, obviously it's not a full review. But for the 25 minutes that I used it, I thought it was really cool. If it wasn't $3,400, if it was like $800 maybe. But the technology is great. It's a little heavy it's like front loaded, obviously, with all the mechanics up front. The part that wowed me the most was the spatial video and the immersive experiences. So they had set up movie clips as well as kind of like this 360-degree spatial video immersion experience of multiple things. Like you were at the baseball game, you were at a soccer game, you were in the ocean with sharks, and you were there. There's one clip where you're literally, it felt like in the room with Alicia Keys, and she's singing to you with a band. Like you could almost reach out and touch her, like she's literally like 2 feet away from you. So those things were really, really cool. I also thought that for a first gen operating system, it was cool how you can open up multiple Safari windows and tabs and applications and kind of work in that environment. I was thinking to myself, like, all right, if I have 6 monitors for trading, can I set up just 6 windows or pockets of windows and have, like, maybe 20 charts up at the same time with the Vision Pro on, with the CNBC or Bloomberg video going, or I could be watching something else like a movie in the lower right, and you could turn your head, you could look. It's like I thought that part was really, really cool. For a Gen 1 product, I was impressed. I think they do need some work on the actual headset. It felt a little top heavy to be wearing for long periods of time. But we'll see what happens. I'm sure the technology will improve, more apps and software will come out, and prices will come down. So that was Apple Vision Pro. So what was strong today? It was basically NVIDIA, Amazon, and Meta. And yields up yields were up to 4.02%, and that's like over 4% gain. So that's why I think next week might be risky for the bulls. On the weak side, you had housing. That's kind of pretty obvious, right? If interest rates are up, housing is going to be down. Extreme Networks was down 4.77%. All of gold was down, but KRUS gold on my watch list was down 4.35. GDX was down 3.48. KRUS Sushi was down 3.8%. But yeah, I mean, it really was Meta and Amazon and NVIDIA. But the semiconductor group, like SOX, they did okay, but they're lagging NVIDIA. NVIDIA is still beating the entire semiconductor SMH or SOX as an index. So it's all NVIDIA right now. That was kind of the summary of the day. One formatting change that I'm doing to the show notes, I've flipped the order of like the testimonials and how to sign up. I put that toward the back end or the bottom end of the show notes. The top of the show notes is just all the content. I think we have enough subscribers. People should know how to subscribe by now, so I put that into the bottom half of the show notes. And all of the content and show notes is at the top. So hopefully you'll appreciate that. I hope everyone has a great weekend. It was a long, tiring week. A lot of different things happened. And I will see you all after the Monday session. All right, later.